Bismillahirrahmanirrahim. Assalamu alaikum, dear students. Hope all of you will be doing well with the grace of Allah. Today's lecture of corporate law, we will discuss the second part of capital of a company, and in this chapter we will discuss debenture. So let's start, students. Coming to the first slide, learning and development objectives of this lecture, we will discuss debenture, classes of debentures and their importance in public limited company. We will discuss how the underwriting of shares facilitate investors in society. Now going to the debenture slide. The term debenture is derived from a Latin word debri, means to owe or debt. The short-term capital is met by a company from banks, mostly by overdraft and cash credits. Long-term financing may be raised by issuing debentures. Now, what is the difference between the overdraft and cash credits? Normally, if you have account in any bank, and you are a good customer of the bank with a good credit ratings, then the bank provides you a facility that if you have 22 million rupees, you can take money from the bank up to 30 millions for a certain short period, and in that period you pay very minimal sort of interests to the bank, which is almost negligible. This is called overdraft or cash credit facility, and normally in seasonal in peak season all businesses avail such facilities from the respective banks where they have their accounts. For example, in this season Pakistan Tobacco purchases tobacco from the growers, the agriculturists, and the banks provide them this facility in the whole area where they have purchase centers in Swat, Bunair, Mansera, Charsadda, Sawabi, Mardan, and what we call the other areas like Gujarat and DG Khan, all the areas where there is tobacco crop and their purchase center of the multinational company Pakistan Tobacco, the banks provide them overdraft facility. Now there is another source to finance the short-term needs of the public limited companies, and it is by issuance of debenture, which we also call bonds. The Sukuk bond, which the Wabda in coming to the next slide, boys. Okay, debenture is a security issued to the investor under the seal of company who become creditors of the company. The people who purchase the bonds, they becomes creditor of the company. While for what purpose they get the bond has a maturity period of 3 months to 6 months to 9 months, 1 year, and on maturity it provides you a face amount. That amount is more than the amount on which you purchased that bond. It has also the interest money on its maturity. It contains a contract. Now the debenture selling is a sort of contract. It contains a contract for repayment of what? Principal sum and the interest at the specified date to the debenture holder on what? On maturity. Debenture includes debenture stock, bonds, term finance certificates. All these are different examples. Debenture stocks are those stocks on maturity of the bonds. The company provide them with certain stocks. They may be preferred stock, but in Pakistan the concept of preferred stock has now been illegalized by the 1984 company ordinance. Bonds and term finance certificate, it is a sort of mutual bank where the people invest, they pool money and then they invest that money in different projects, and when the profit comes it is divided among the term finance certificate holders on certain ratio, a sort of Islamic financing. Now, features of debenture. What are the main features, boys? It is an instrument indicating indebtedness of a company. It shows that the company has a debt and they owe a debt to someone, and that someone is the bondholder. It has nominal value like the share. There is a face value of bond that includes the principal amount plus interest on maturity. It is a document issued under the seal of the company. The company seal is there that shows that it is issued by a certain public limited company. It is, it is a contract between company and the bondholder. A fixed rate of interest is paid on debenture on its maturity. Debentures are covered by the assets of the company. The security behind the debenture, behind the bonds, is what? The assets of the company. They are pledged. Now there are different types of debenture: ordinary debentures, mortgage debentures, redeemable debentures, irredeemable debentures, registered debentures, bearer debentures, and equipment debentures. These are different clauses of debentures and we will discuss them. Ordinary debentures, which are also called naked debentures, and they have a specific amount on the or a face value which shows the principal amount plus interest, and it is paid on maturity to the bondholder, whoever is the bondholder. Mortgage debenture is another sort of debenture. A mortgage debenture is one which is secured by a mortgage on the real property of the company. If the company fails to repay the borrowed amount at the specified period, the debenture holder has a legal right to sell the property and recover the loan. Some assets of the company, machinery and other things, are mortgaged with someone. If the company fails to pay the principal amount along with interest on maturity, then that financial institution, that individual, can sell the property of the company and recover his principal amount and interest from the company. Redeemable debenture, the debentures which are repayable after a certain period are called redeemable. The interest on the debenture is paid periodically, but the principal amount is returned after the fixed period. Debentures are usually issued on redeemable basis. The company mostly borrows money on redeemable debentures. It is the most famous kind of debentures, and interest is paid on them periodically after 3 months. And when the maturity comes, the principal amount is only given to the bondholder, while interest has been paid to him in certain periods. Like if it's redeemable, its maturity period is 1 year. After every 3 months, the bondholder gets an interest, and in this way he gets a 4 times interest in the lifetime of the irredeemable debenture or bond. Registered debentures are those debentures which is issued in the name of the owner, and the debenture, the name of the owner, thus appears on the face of the bond as well as on the books of the company. It is issued on the name of specific persons, and nobody else can get the principal amount and interest on maturity. Only the person whose name is written on that debenture, he can convert them into cash. It is a sort of secure debenture. Bearer debenture is opposite of registered. This debenture has no name on its face, and whoever has this debenture, who holds them at the time of maturity, he is paid by the financial institution on behalf of the company. Equipment trust debenture, the debenture which are issued to raise funds for purchase of new equipment of a business are called equipment trust debenture. It is basically to purchase new equipments and capital expenditure, where instead of getting direct loan from the banks, you issue bonds, and in those bonds you get finances from the bondholders. Now what is underwriters? Underwriting of share is, what is the concept behind underwriting? Is basically they are the financial, a contract made by the promoters to a third party or financial institution to purchase the initial offered shares to the public. The shares which the company has to offer to public to get the commencement certificate and have an evidence that they have sold the initial shares. Those shares are normally sold in the market by financial institutions, and those financial institutions are called what? Underwriters. While the process of selling shares of different new companies are purchasing them in the first place is called underwriting of shares of the newly made companies. Underwriters facilitate the commodity in the financial markets in a way that it minimizes the risk of the new companies, that they give assurance to the new companies that they will purchase the first shares which the company which the company has invited investors to purchase. Hope you understand it. Come up with some good questions in the live session. See you inshallah ta'ala in the live session. Khuda Hafiz.